Hi, well, it looks like most people have signed on, so I think we'll get started now. I'd like to welcome you to our presentation today, an introduction to the annual statement. I'm Karen Shea, the Chief Auditor at PERAC, and with me is Scott Henderson, the Deputy Chief Auditor. We know that this is not new to many of you who have been preparing the annual statements for many years, but we do have a few new accounts to tell you about. And for those of you who are brand new to this, Scott will be walking you through the process. Please don't be afraid to ask questions. Just send them through the chat, and we'll answer them as we're going along or at the end of the presentation. We will be recording this presentation, and we'll have it available on the PERAC website for administrators and board members to review at any time. Scott will now take you through the annual statement process.
All right, good morning. Before I start going through my slides, there is one thing I want to point out, especially for the new people. The second part of this presentation, I'm going to go through an annual statement, basically page by page. And on our website, we have posted a blank annual statement for 2019, as well as a sample annual statement. So if you want to go to our website and try to find those, the first part of the presentation, you can follow along in the second part. You go to PERAC, publications, and then you can go to the educational materials, and there's a link for 2019 educational materials. That'll bring you to the blank statement. The sample annual statement is pretty much the same as the blank statement. It just lists where the numbers that show up in multiple places, all the cross-references are listed. So, all right, if we can start moving the slides forward, maybe. All right, to begin this, we're going to start with the month of December, once the slide will pop up. But basically, you've been doing your accounting through the entire year, January through November. Now we get to December. You will do the same accounting in December that you were doing the rest of the year. The cash receipts, cash disbursements. We're still trying to get the slide to go forward. No, thank you. Couple quick. So, like the other months, you're doing your cash receipts, your cash disbursements. You also do any necessary journal entries. So if you have people retire in December and you're moving their money from the annuity savings to the annuity reserve. Okay. Now, after you've done your cash entries and those journal entries, although our accounting system is 99% cash-based, at the end of December, we do set up some accruals. So we're going to look to see if you have any account receivables, which is money that you're due by the end of the year, but you haven't received or deposited. So if you get money the last day of the year and take it to the bank on January 2nd, set that up as an account receivable. The accounts payables are the money that the charges are accrued in December, but you just don't receive a bill until January. So at the end of the year, you do want to look for those and set them up. So once you've made those accruals, and you create a trial balance, this is called the pre-close trial balance. And when you produce the annual statement, these are the numbers that you'll see popping up on the annual statement for all the receipts and disbursements. The 6 funds, the annuity savings fund, reserve, etc., those numbers are not finalized yet, but what you're going to do next is close your books, and then that will finalize those accounts. So when we talk about closing the books, it's just a process where the receipts and disbursements, as they've been built, they start the year at 0, they build up amounts as the year goes along, and then at the end of the year, we have to clear them out so that they can start the next year at zero again. So the money leaves those accounts and gets put into one of the funds, and that process is closing the books. Then once the close has happened, you can produce a new trial balance. You should see a lot of zeros for all the receipts and disbursements. If you don't, then something's wrong. But and then also the funds 3293 through 3297 all have their final balances now that will show up on the annual statement. So, one other step you want to take, the supplemental schedule is the list of everyone, all the members of the system, both active and inactive, who still have money with you. So it's a giant list, and it shows the last year's activity. As you go through the year, you can balance the columns in the middle. They're columns for deductions and makeup payments and refunds out and transfers out. And then at the end of the year, you do want to make sure that your ending balance on the supplemental schedule matches the accounting. So 3293 on your post-close trial balance should match the supplemental schedule ending balance. If you are one of those boards who allows people to buy time through installment plans and you've set up a receivable for the makeups, then you'll have to manually add that makeup amount to the bottom of the supplemental schedule. But that plus the schedule's total should match the accounting. Earlier this year, we did send out a memo, number 9, where we summarized the new accounts that we had created. We touched on them briefly in last year's annual statement training, and then if you saw the administrator basics training that I did, I talked about the new accounts in a little more detail. So the memo goes through those. It defines what the actual expenses are. So right now, I'm just going to swing through them fast. I'm not going to redo the administrator basics training, but so the first account is 4701 for carried interest. The second account is 4702 for the equalization when you're paying the later investors pay the earlier ones. And then 4703 is for miscellaneous investment expenses. One question I've gotten through the year is, because 4701 and 4702 are pretty much only alternative investments, most boards won't use those. 4703, there have been instances where non-alternative managers are charging you something that's not a management fee, so it's okay to use 4703 even for fixed income or equity if you have to. And then these accounts are closing to the investment income control account, just like all the other gains and losses. So it shows up on the income page in the annual statement.
We have a question. Do these accounts apply to a system who is 100% invested in PRIT?
Nope. If you're only in PRIT, you won't need to use any of those accounts. Right, so the annual statement, Schedule 7 now has a couple new columns, and Schedule 5 we just have a reference to Schedule 7. And we did set up one new expense account because boards were handling the fringe benefits differently, and also the healthcare costs tend to grow a lot more than salaries or the other expenses. So we've created 5120 to segregate them, and hopefully you all use them this year. So that's going to show up on the disbursements page of the annual statement. All right, as you see from the pictures and the little animation, this is now going to be the second part where I am just running through the pages of the annual statement. So if you've got the blank annual statement and want to follow along, I won't go quite as fast as we went through those first slides.
We got another question about posting the presentation to our website, and yes, we will be posting it.
Yep. All right, so the first page is this board signature page. So in theory, all 5 of the board members are going to sign it. Please put the terms on the page. Most of the board members have the terms. The ex officio members, there's no term. It's just as long as you are the town accountant or the city auditor, you're on the board. So they're not going to expire. There's a handful of spaces for investment managers. If you need additional pages, just say, see attached list and attach the list. But please do attach the list. We get a bunch that say, see attached list, and then we can't find the list of all the managers. So include it if you do. If you have an investment consultant who's kind of helping the board along, put them there. And then if there is a custodial bank keeping hold of all your assets, list them as well. So that's that page. The next page is the balance test. So the balance tests are basically the money coming in, money going out, stated a couple different ways, but all the totals should be the same. Every year I'll get 3 or 4 people telling me the balance tests aren't matching. One of them will be different. Why? Usually what's happened is if you do an entry in the middle of the year and you're going to debit one of the 6 funds, then the credit has to be one of the other 6 funds. You can't do an entry that's half to a fund and then half to either a receipt account, a disbursement, or an asset. So if you do one of those, that will throw off the balance test the next year. All right, now we start getting into the financial info, the assets and liabilities. The top portion of the page is just a list of asset classes where you enter how much is in the different classes. They're roughly in order of liquidity, but you can see the PRIT core, which I think they now call the general allocation fund on their statements, is way down the bottom, $11.99. And below the asset types, it's also the 6 funds. So the 6 funds should total to the same as the assets. Next page is what's happened the last year, fund by fund. So we start with the prior year's balance, then there's receipts, interfund transfers, and disbursements. And below it, it says list below all transfers. When we review the annual statements, we find an awful lot we take the list from the bottom and see if the math works to match the list at the top. And often people will either leave out entries or they've got last year's numbers hanging around, but it's not that uncommon for us to see ones where the interfund transfers at the top do not match the list. So please double check your list to make sure. Go back. Yeah. The most common interfund transfers that are out there, new retirees. So when people retire, their money goes from the annuity savings fund, where they've been contributing all the years, over to the annuity reserve fund. So now once they retire and they start getting their money back as part of the annuity, it comes out of the annuity reserve fund. 10-year inactives, this is only for non-vested people. So someone works 4 or 5 years, they stopped working 12 years ago, you've contacted them, they haven't gotten back, they don't seem to want a refund. You can move the money out of the annuity savings fund into the pension reserve fund. And those first 2 are actually in the statute. So, but again, the 10-year inactives is only for non-vested people. If someone is vested, they're deferring in the annuity savings fund. And the last one there is for the ones whose pension fund is getting close to zero or it's going to go negative. You can put in extra money from the pension reserve just to keep that fund positive. The appropriation letters, the final page, there's a column that says pension reserve to pension fund transfers. So just take the money from there. Hopefully it's larger than you need to keep a zero balance, but I would make the full transfer. If you haven't done the transfer in a few years, just add the ones together from all the appropriation letters. Next is the receipts page. And one thing, if you're looking at this, you can see that the receipts are kind of gathered together underneath each fund. So the particular fund that an account closes to, that's how it's organized. So the annuity savings fund has the deductions, the transfers, and the makeup payments going into it. So when you do those closing entries, these are the funds that they close to. One thing to avoid on the receipts page is negative receipts. We'll see ones that do end up negative if people have over accrued in the past. There's really no way around that. But something like 4825, if you sent out a $5 check and you don't know where to account for it, use 5589. That's a disbursement. Don't call it a negative miscellaneous income. And that last note, I think especially this year, we will be seeing negative numbers for, can we go to the next slide? For the pension reserve fund, the investment income, I got ahead of myself, but the receipts page and the income page both have excess investment income going to the pension reserve fund. So if your investments are not great, you'll often see a negative number for that on the receipt page. Okay. The disbursements, we don't see too much going wrong with that one. If you're a PTG system, double check that 5751, the pensions paid number at the top should total to the same as the breakdown below it for the pensions. We do see that quite a bit where it's not equal. All right. Next page is the investment income. So at the top, it's divided into income from source. So the cash, the bonds, the equities, then the pooled funds. And the last one, F, is for commission recapture and securities litigation. So not too many people have commission recapture at this point, but quite a few are still getting securities litigation. Sometimes it takes 8 to 9 years to finally settle. So you might have a number there, even if you've been in PRIT for as long as you can remember. And down below are the additional adjustments for the carried interest, the equalization, and the miscellaneous expenses. Okay, then the final note on the slide. The annual statement does show all these numbers for 3 years, so take a quick review, check to see if anyone's numbers have spiked or got up and you don't quite know why. Maybe something strange has happened. All right, after the financial information, it comes the membership page. So this is just to count how many people are actively in your system, how many people are retired, and also covers things like who retired during the year, how many died, how many got terminated. Next up is Schedule A. This is where all those accruals, the payables and the receivables get put. The top half is the receivables, so the money coming into you. The blank spaces at the top you can use for investments. So if a manager does a trade December 29th or 30th and it takes a couple days for the money to actually change hands, that goes here. And the reverse situation on the payables down below in those blank spaces. And now the back portion of the statement is all the schedules. So there's going to be 7 schedules. Schedule 1 is cash. So you want to have your local bank accounts, and even including ones that you just throw in the amount of money you're going to immediately spend the next day, like a retiree payroll account or some sort of vendor warrant account. We do want to see all those. If you have managers who are actively buying and selling assets, they're going to have cash accounts set up. Generally, the custodian is tracking those, and the custodian itself will also have some cash accounts for transferring money back to you or for you to send it to the manager. Schedule 2, short-term investments. We'll see a handful of systems each year who do have something for 6 to 9 months, but not too many of you do have that. Schedule 3 is for fixed income. There's an A, B, and a C. Same thing with Schedule 4 for equities, A, B, and C. A is just what you have at the end of the year. B is what you bought during the year. And C is what you sold. So if you bought and sold something during the year, it's going to show up on B and C, but not on A. Schedule 5 is the pooled funds. And PRIT cash should be on Schedule 5. Please don't put PRIT cash on Schedule 1. The PRIT general allocation account is a pooled fund. And if you have pooled funds, multiple managers with multiple accounts, we would ask you to put those managers together and then throw a subtotal onto the schedule. And then you could also have a grand schedule total down at the bottom. Schedule 6 is 1 through 5 all together, but it's only by ledger account. I would even throw all the cash accounts together. Lots of people have been sending in their Schedule 6s with 3 or 4 cash accounts and then everyone else by ledger. I just combine the cash too. And Schedule 7, investment fees. So the top part is manager fees. All your managers should be listed there. Middle is the custodian, and then the bottom portion is the investment consultant / outsourced chief investment officer if you have one of those. So that is a quick run through the annual statement. Well, here are some more basics that didn't get mentioned yet. So May 1st is the deadline for this in the statute. If you need an extension, let us know in writing. Send us an email and we'll answer you in writing. And if you can send it to us electronically, you should use interchange, just because the supplemental schedule, we're more comfortable having it sent through an encrypted method. But if you have trouble finding the interchange website, just do a search for Massachusetts Interchange. And then the email address to use once you are in interchange is up there on the screen.
Yeah, we have a few questions that we'll answer now. So one is, if a board member is absent during the board meeting approving the annual statement, are they required to sign if they are absent from approving the annual statement? Yes, they are required to sign. That's their approval of the annual statement.
Yeah, we like to see the signature even if they just happen to not be there that one day. I mean, they're on the board as of December 31st, so they should be signing it.
Okay, here's another question. If you have an active that have been transferred to pension reserve and they come back for a refund, do you list it on the transfer fund page?
Yes, you do. Yeah, you'll have to do the refund in 2 steps. First, you do the interfund transfer to put the money back into the annuity savings. So that's the part that goes on that change in fund balance page. But yeah, it does need to show up on the bottom half. Okay.
Does anyone else have any other questions? We don't see any here. Oh, yeah, okay.
I have a question.
Yep, I got it. If we have until 5/1, how can we send the cash book for January and February if we haven't closed 2018 yet? You can't.
Yeah, send the cash books on the pre-close basis. I think well, it depends. A lot of the delay might be the supplemental schedule is off, so you're just trying to reconcile deductions or something like that. It's not always going to require another accounting entry. But yeah, and I think we used to tell people that March something was the deadline for the December accounting. I was never sure where that came from, but and we do tend to give people a little more time for the December. Didn't we used to have? All right, so there's a question about 30 days with the cash books. They used to have 60. I think the regulation has always said 30 days after the end of the month. I don't think we're not sending out notices on the 32nd day asking for cash books, but I think that part was always 30 days.
Okay, then we have another question. Is the scanned signed copy submitted through interchange sufficient, or do we still have to mail the hard copy? We'd like to have the hard copy of the signature page, but the rest of it can all be electronic. Okay, we got another one. What if you have a board member's term expires March 31st? Who signs the annual statement that is approved in April?
I would try to have the full board who are on the board as of 12/31 sign it. If someone's term expired in February and they've completely left the area and can't sign it, then just send it in with their name and it'll be blank. You can type a note like left area or, term expired, not found, or so we don't wonder why there's only 4 signatures.
All right, we have another question. Should we include account 4703, investment expense, under income on Schedule 7 management fees? There's a new column for...
Yeah, 4703 is its own column. 4703? Yeah, way over on the right. So as you list your managers on the left, columns A through E are still just for 5304 management fee, but the ones who have carried interest or miscellaneous, just put that amount in column K, each row for the manager. A lot of people seem to be looking for a checklist that we used to put out, which went through the numbers that popped up on, say, pages 2, and then schedule 3 or 4. We haven't updated the checklist in a couple of years, and we're actually, when we're doing the internal checks, we're trying to kind of settle on a spreadsheet that works well for those. So I don't know if we'll eventually send that off to the board that they can use, but if you have the checklist from 2016, it has not been updated, you can still use that one. But it's, yeah. Right now we're trying to do something that's more totally in Excel.
Okay, so we have another question. Parent previously put out a publication preparing the annual statement. Are you going to continue?
The preparing the annual statement one, we are not updating. That was really, it seemed to be more for people who were doing it by hand. At this point, our software is really doing most of the steps, so it didn't seem to be much point to continuing.
We got a question about if we could put a blank checklist on the website. We can try and see about doing that. Okay, so we don't have any more questions. We'd like to thank you all for listening today.
All right. Have a nice weekend. Bye.
Thank you.